Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 4th of June, 2019, 4:35 p.m. Central Daylight Time. So here we are with a market where the president today is starting to talk he wants more the tariffs on Mexico. Then we heard him lighten his tone as the Mexican foreign minister came on, and he gave it an 80% chance there will be no tariffs. And then we had that forum in Chicago today, whereby we're looking at a situation where we saw Fed Chair Powell, we had Clarita. I mean, everybody's speaking. I don't know all of them that were here today. They certainly weren't all here, everybody. But the key was Mr. Powell basically saying the Fed still has the markets back, but they're data dependent. They want to see where the trade goes. It's not good right now in terms of having all these issues. But the market responded because the market's looking for rate cuts and rallying like a son of a gun today. Okay, will it hold up becomes the question. Tomorrow we get to a level where the Mexican government's delegation will be speaking with our delegations here, and we'll see how much progress can be made. Today we got the API petroleum numbers. I was stunned when I saw these numbers. You added $3.5 billion in the oil stock. The motor stocks were up $2.7 billion. Distillates wiped out that $2.1 million decline and came in with a 6.3 million barrel increase. And even Cushing went up large. So I don't know where the markets are going to be tonight, but none of these figures are friendly. And I would assume that these numbers are all going to be lower than that when the market reopens. An assumption on my part. Metal markets, another good day, and I'm going to talk to you in a few minutes about the metal markets because I did do my gold report, and I'll explain to you how you get to it. Here's the S&P 500 index, finally a bounce from that break low. That's how I'm viewing it. Finally a bounce as we take a look at the weekly area chart. The daily bar chart, if you take a look, it too has had a nice bounce, and the market got over a last break low. So what I think has finally happened here is this wave down, for the moment at least, is abated. And the market is now looking at probably these trade tops. You could even go all the way up here, down to this bottom where the market's finally broken that pattern of lower highs, lower lows. In terms of resistance, if you'll recall yesterday, we were down here and the question was, I had mentioned, I think, that the market has levels of different resistance between the 18 in red, in gray, the 200-day, and then in green, the 100-day moving average of closes. And even if the market rallied, we could possibly see some stiff resistance right there. You can see what the market did. It had a big rally today, 55 points is large, and now the 18-day is waiting for the market. So let's assume the market goes up from here. You still have resistance, and you'll have a pattern of a lower low, higher high. There's a big difference between ending a wave to the downside and starting a new wave to the upside. When I come over and look at Bollinger Bands, you ran the Bollinger Band here, stepped to the right-hand side, came down under it, and now you're back over it. So the market is what? It's paid attention to it to a degree and run back into the resistance area. In terms of momentum, today, let's go to yesterday. Yesterday, both numbers were under 20 in the slow stochastic. The day before, they were under 20, and the day before. So what the market did is it had embedded, and it instantly lost it. That puts in these goals. You're already there. Can you go to the 18-day average? Of course you can. But you've hit the necessary targets, is my point. You moved into the key moving averages above the slow stochastic, and that's what that rule's about. When I come to the NASDAQ, you lost the embedded reading by a half a point. It probably will lose that by more when it reopens tonight, because the way that works is the math will kick the market that number higher unless you were to open sharply lower, and I don't see anything to do it. So in losing the embedded reading, the first goal is the 200-day average. It's 71.79. Let's see what that number is. Yeah, that's around 71.79. You're basically there. Then you've got the 70 right here, the 72.81, the 100-day, the 18-day, and actually 71.96. I'm giving you that information not right. I'm looking at the gray. I'm colorblind here. Is the 200-day average. That's about where I think the market has a good shot of going before it encounters the resistance. It too, if we come back here, went to the Bollinger Band, got under it yesterday for the first time, popped back over today. But the difference in this chart between the S&P is you still have the lower high, lower low pattern. This is a bounce in a bear market, not like the S&P where you ended that phase of it. When I come to the Dow, this is more like the S&P. Why? Because this rally high took out that one. If I come to this beforehand, you had these lower highs. You can see that. Lower lows. You went into a pause, held these key averages, let go, swung around today. You never did embed here. This is a market that got oversold, and I'm going to still look for a lot of resistance in between the 200-day, the 18, and the 100. Yes, I think we ended a phase to the downside, but I'm not seeing anything yet bullish on these charts. I could regret saying that, but it's what I'm seeing. In the Russell, it's more like the NASDAQ. Lower highs, lower lows. It did lose its embedded reading. My rule is when you lose that embedded reading, the market often, it is not the word always, makes a run to the closest of the main moving averages, in this case the 18, 15, 23, about 17 points higher. In the VIX cash, the market fell back to the 18-day average of closes, that line in the sand. I want you to look at how this market has been paying attention. It's not been able to get to the upper Bollinger Band. It gets a rally, doesn't follow through, has fallen back to that number, and from there, it's held. It hasn't broken through 1672 yet, a previous low. Now, if it does, that will end this up phase. It's be the flip-flop of the stock markets. It does not mean it's starting a down phase. There's a difference there. I was looking at the bonds and trying to figure out how many days over the upper Bollinger Band it had before I did this. 1, 2, 3, 4, 5. On this day, it was under. So you got to that max number I was looking for, and this is when the market pulled back under it. I did see in TLT it went up to 7. Stock indices can be a little different than most of the futures. Remember, not stock, but ETFs can be a little different. You still have the embedded reading at work here and here. Now, if these markets lose it, the odds favor them pulling back a little bit. You've got a probability, if you go to the CME Fed Watch page, of near 90% for a September rate hike, and one after that approaching 80% around December. So take a look at those. You'll see what's going on in the market today. Of course, the stock market reacted to hearing the Fed say, we got your back on rate cuts. And he didn't say it in that exact language, but that was what the market interpreted it to be. Here we are with the market that backed off also under the upper Bollinger Band. Now, as we come to TLT, it was 7 days in a row that I watched. My guess is this market's going to be under pressure when it reopens, might lose that embedded reading, and maybe we're going to see a correction in these markets. Interesting. You get the Fed to get everybody's back in the markets all of a sudden, instead of rates going down, 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 they're trying to give you a bit of a reversal, but boy, they were like a rubber band, stretched out. I mean, you went to 2.1% or so. You probably got ahead of yourself. In the dollar index, you've gone from a Bollinger Band top to a bottom. I think the pros are covering shorts right through here at this point. That's the zone that I'm looking for. You got to 96.90 as low today. The lower Bollinger Band is 96.91. My theory is that the first time on the upside or downside you hit it, especially if you've got a broad sideways action, is where the market bounces from. It stops that level of decline. When you come out of the sideways action and start riding the band, it trades a little bit different than that. On the euro, I see the flip-flop of the dollar. The market had a good rally today, got to 112.89.5. The Bollinger Band's 112.92.5. It missed it by 3 ticks. Will it get there? I don't know. But it doesn't matter. You've gotten to the zone. You're overbought. You can get a correction in this. What I'd be watching is the British pound. You lost the embedded reading. This is what an embedded reading looks like. You can see both the numbers are under 20 for a duration here. When you lose it, it's often. I can only give you the probabilities. My word, often. It often is a sign that you're lost that rubber band impact to the down, and the market's likely to bounce. And I look at the nearest major moving average, and in this case it's 127.75, let's call it, the 18-day average of closes. In the end, 3 days in a row up and over the upper Bollinger Band, overbought as can be. This market can give you a pullback at any point, but it's in an uptrend. It's got support right through the 18 and the 100-day average, but I do think the pros are lightening up on positions there. When we come to Bitcoin, Bitcoin was interesting. If you look at the market yesterday, this is Monday's action, you had already had the pattern of the lower low. Now, if it loses the embedded reading, and with here, it still had it. It lost it today. That's when I look for price in the closest moving average. In this case, it's the 18 to come together. And that's what happened. So now this market's in a bit of a downtrend because it's got lower highs, lower lows. Whenever you close under that 18-day average, I define bias from that. It's pointing down. It could be going towards that lower Bollinger Band, which is moving at a big clip each day. It could be as high tomorrow as 68 for all I know. It's moving about $300-400 a day right now. In the Brent versus WTI crude, the differential between the two got under $8 today, back to about $8.35 or so. You can see how the market rallied late in the day on a settlement to close over the lower Bollinger Band. You had been stretched out here 3 days in a row under it, and I'm telling you, I don't think that the API numbers were friendly. We'll see if the EIA comes in anything, but a 12 million barrel build is not what I think anybody that I know of was looking for. We'll see what goes there. You can see in the WTI, you also got to the right-hand side of the band, but that's all you did. Can you embed these numbers? Certainly. Both numbers are under 20 today. They were under 20 yesterday, but not the day before. Tomorrow's the key day in them. In the Rebob, look at how you keep coming down here. Oversold 3 days in a row, maybe 4 under the lower Bollinger Band. It's just been straight down since Memorial Day when you didn't get any bounce in gasoline prices at all, and this market is down 32 cents from that time. Nat gas, you know what I've told you every day, you need to get warm weather to get the draw on this. So we'll be looking to see how that comes out and what these weather forecasts are all about. I want to talk to you about my metal report. In order to view it, all you have to do is go to our website. There's nowhere that you have to go and fill out a form first that we email you a link. You're going to be able to give all the information you need right on the website. I included seasonal charts. I included price count analysis in it. I've given you the weekly charts, I've given you the daily charts, and I've explained in detail the setup that is going on, trying to give you an idea. So all you need to do is go to our website, and under the word education, you're going to see metal reports. Just click it, fill out that info, the report will come right up for you. I can't make it any simpler than that. If you don't want to do that, you won't see the metal report. I hope you enjoyed it, put a lot of effort into it. It's longer than normal. It's a video today, and I think you'll have a kick out of seeing it. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.